Good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at the local bourse close today, Wednesday. Okay, as always, we begin with the main index, which finally today broke past the 7,000 level. It is up 1.1% to 7,057. The last time we hit the 7,000 mark was back in July. But then again, this one is our highest close yet since February of this year. This happens, of course, as cases fell to its lowest in 2 months. Yesterday, you had the health department reporting 9,055 COVID-19 infections. That's our lowest yet since August when cases started to hit the 5 digits. Now, this sparks hopes that, further reopening of the economy might follow, especially with alert level 4 set to lapse again in a few days' times. Looking at our leaders and losers for today here, you have a lot of advancers exceeding gains seen today in the main index here. You have Globe, for one, with a whopping 9.5% increase. SM Investments, likewise, also increasing close to 5%. There's also Converge, which today climbed close to 4.8%. That's a record for a second day. This as a stock has been added to the FTSE ASEAN Index, which is composed of the 30 top companies in the regional markets. Converge now ending the day at 44 pesos a share. On the other end, you'd see here our biggest loser for today is First Gen, down by 7.7%. This comes ahead of that disclosure that it will indeed exit the main bourse due to a reduction in its public float following the completion of KKR's tender offer. Again, the U.S. private equity firm is going to buy a 7.3% stake in FGen. That's going to be for 8.7 billion pesos, acquiring all 262.9 million shares offered by FGen shareholders. Now, KKR Unit Philippines Clean Energy Holding will be buying the shares 33 pesos a piece. This will boost KKR's stake in FGen to 19.9%. FGen today capped off the day at 30 pesos a piece. Now, question is, which stock will be replacing it on the main bourse? That's going to be Wilcon. Wilcon, again, will be added to the main bourse. That's going to be effective October 11. The stock today jumped for a record 12% before tempering gains to 8.1%. According to Andre Soriano, Wilcon has already been a candidate for inclusion in the main bourse even before this news regarding KKR stake in FGen, given Wilcon's market cap and trading volume. Looking at this chart right here, you'd see Wilcon ending the session at 31 pesos and 35 centavos a share. Lastly, let's have a check at the PH Resorts Group. This after it announced that its unit, Clark Grand Leisure, is pausing its integrated resort and casino project in Clark Global City. That's due to uncertainties in the gaming sector, especially with growing competition in Clark, Pampanga. PAGCOR already approved the voluntary suspension of the project's license. The Dennis Uy owned company says PH Resorts will instead focus on the development of its casino project in Cebu. Looking at PH Resorts Group today, the stock, at least still, despite a bit of news, is up by 1.7% to 1 peso and 21 centavos a piece. Two presidential aspirants filed their certificates of candidacy this morning, and these are former Senator Bongbong Marcos, followed by Senator Ping Lacson. Marcos was accompanied by his family during his COC filing at Sofitel, Manila, but Marcos's camp has yet to disclose who his running mate will be. Lacson, on the other hand, was joined by his own running mate, Senate President Tito Soto, who also filed his COC for Vice President. Resigned DPWH Secretary Mark Villar is seeking a Senate seat, while Senator Migs Zubiri is gunning for re-election. Former MMDA spokesperson Celine Pelago personally filed her certificate of nomination and acceptance as the first nominee of the Malasakit Movement Party list. More aspirants are expected to file their COCs this afternoon, including Senator Joel Villanueva, who is eyeing for re-election in the Senate. Here are other headlines we're keeping our eyes on. The Energy Department says the recent increase in the prices of petroleum products was due to the reopening of the global economy. DOE Assistant Secretary Gerard Arquiza explains that demand for gasoline has climbed as economic activities rise amid the global vaccination drive. Arquiza notes that prices of petroleum depends on the world market and is out of the government's control. Arquiza says the government is open to hear calls of motorists for fare hikes amid the rise in oil prices. Consumers saw an increase of up to 2 pesos in fuel prices since Tuesday. The Agriculture Department says it is now wrapping up the review of the tariff regime for yellow corn, a key raw material for animal feed. The agency says the review is set to be completed by this month. Agriculture Undersecretary Ariel Cayanan says a technical working group will also present its recommendations to Secretary William Dar this October. The TWG was created via a special order back in July. The review also seeks to identify necessary measures to ensure protection of corn tillers if the tariff reform is implemented. Now, the Philippine economy may only return to pre-pandemic output by the fourth quarter of 2022, and this could potentially make the country the last in Asia to regain its pre-COVID growth level, that's according to Moodys Analytics. And speaking of 2022, Moodys Analytics has slashed its forecast for Philippine GDP to 6.4% for next year. That's from a previous projection of 8.8%. The revised forecast is below the government's target range of 7 to 9%. For 2021, Moodys Analytics has kept its Philippine growth forecast at 4%, which is at the low end of the government's full-year target of 4 to 5%. Okay, to find out more why they find the country's recovery path to still be long, we have on the program Moodys Analytics Chief Economist for Asia Pacific, Stephen Cochrane. Good afternoon, Steve.
Good afternoon.
Okay, the slash in growth forecast for the Philippines, at least for 2022, comes at a time when the health department is reporting lower cases in the past few days, in fact, hitting its lowest yesterday at over 9,000. But still, what prompted you to cut your projections here?
Yeah, it really is good news that the number of cases is finally coming down. We've been waiting a long time for this. There's a couple of things. One is that the number of deaths of COVID is still high. It hasn't really begun coming down, which means that there still has to be a concern about the ability of the public health system to manage the COVID pandemic, even if the number of cases is coming down. And so it does raise the possibility that there will still be some quarantines, at least limited quarantine measures going forward for the pandemic. The other reason is that the Philippines hasn't really participated as much in the boom in exports in the goods producing side of the economy that much of the rest of Southeast Asia has. Philippines has just sort of recovered the volume of exports that it had prior to the pandemic. But nearly every other country in Southeast Asia is well ahead of the Philippines in terms of participating in the global supply chain, in the global demand for goods, for durable goods around the world.
Okay, at least that provides a better picture as to how much we lag the rest of the region. But if we can just zoom out a bit even further, by how much really do we fare compared to our neighbors here in Southeast Asia? How is our situation worse off? I mean, other than the export situation.
Mm-hmm. So, first of all, the Philippines is already kind of behind the rest of the region in that the level of GDP, the production of total goods and services in the country, is still only about 90% of what it was prior to the pandemic. If you look at other countries in the region, Malaysia, Singapore, they're close to back up to 100% of where they were. Other countries like Vietnam, Indonesia, they're at or above where they were prior to the pandemic. So it's kind of, starting from behind the game, the ballpark's a little far, the goalpost is a little farther out for the Philippines now than it is for other countries. One of the difficulties that the Philippines will face too going forward is that it, along with Thailand, is one of the most dependent, or at least has been in the past, the most dependent on international travel, tourism, hospitality industries, and so forth. And that will be one of the last pieces of COVID recovery to come back into place. That all the countries of the region and the globe really have to figure out how to manage international travel and all the testing and quarantining and such that may be involved in getting people from one country to another. And finally, a big part of that travel and tourism business comes from China. And China is not allowing a lot of travel in and out of its own country. And that may not pick up until maybe after the Winter Olympics in second half of February. So a lot of friction there in terms of that side, in terms of the service side of the economy related to travel and tourism.
Okay, good thing you mentioned about travel here. Do you at least have a model as to when you see the sector, at least the travel sector here in the Philippines, somehow recovering from its losses?
Well, fourth quarter, the current quarter will be tough. I think the beginning of it might be in the first quarter of next year. And then it really simply, this one really depends a lot on how quickly government policymakers can get effective systems in place to manage the travel, to be testing, to come to agreements with countries around the world of who will be allowed in and out and what the requirements will be. So it'll be slow, but I think we'll begin to see a beginning of recovery in the first quarter of next year.
Okay, Steve, of course, much of the bleak outlook on the country's economy also hinges on our restrictions here. I mean, you have, of course, recently, the capital at least moving from citywide lockdowns or region-wide lockdowns to more targeted restrictions. How much is that helping the economy pick up steam?
This is very important. One of the reasons why the Philippines is behind the curve in terms of recovery is that the lockdowns have been so broad, covering a large amount of Metro Manila and a large amount of the whole country. It's at certain points in time. Being selective, being able to apply quarantines just in the neighborhoods that really require it, where there are clusters that are appearing, that will help consumption spending, consumer spending to really accelerate. And that will be the first impact of economic recovery, or the first cause of economic recovery, is that consumer spending. Once people can get up, out and about, go to restaurants, go to the mall, do what they like to do every day. That's absolutely critical. And so then to be able to maintain that, again, I go back to the point that there has to be a really effective, integrated method of managing COVID in terms of the targeted lockdowns, in terms of having enough space in hospitals to take the serious cases. And also, frankly, I think it would be helpful if there was some more fiscal stimulus from the government. That the country's been down and out for a long time. Small enterprises are going to have a hard time getting back into business. The long-term unemployed will have a hard time rebuilding savings. Any kind of help that the government could get in terms of additional spending at this point would be very, very helpful.
Okay, of course, that puts into focus biennial theory, which still, as we speak, still up in the air over at Congress. But again, one other issue here that we have to look into would have to be inflation. Is there a risk that it will be more entrenched rather than temporary?
Yeah, inflation's a trouble in the Philippines at 4.8%. It's been in the mid to upper fours for a while now. And you report earlier on higher gasoline prices, energy prices. That's just one more factor that could keep inflation up for a while. And that would be something that would hold back consumer spending a little bit if inflation continues to be entrenched, both in terms of fuel and in terms of food, because inflation for some parts of the basic economy in terms of food is quite high as well. And it puts the central bank in a little bit of a hot spot, and that the economy is weak. I don't think the central bank wants to be raising rates to try to contain inflation. when the economy is still rather weak. My guess is that the central bank will stay on its current path of no change for some time, maybe at least until the middle of next year.
Okay, maybe at least hold on to the current rates at least by mid 2022. But one other thing, of course, I mean, the big story the past few days, you have a lot of candidates already filing their certificates of candidacy here in the Philippines. How is the current political climate affecting sentiments here?
I'm sorry, your voice broke up. I couldn't get that question.
Okay,
My apologies.
I just want to ask you, the current political climate here in the Philippines, how is that going to affect investor sentiment here in the Philippines?
So the political climate, I mean, the election is in a sense going to be wide open. I think there'll be a lot of uncertainty until the election. I don't think it'll be too important of a factor in terms of holding back investment spending, but it does add a little bit of uncertainty to the outlook. One of the positive factors of the election, however, and this has happened with every election, in past decades, is that there's simply a lot of spending that takes place related to all the campaigning going on around the country. And so there could be actually a minor positive, but a minor boost to the economy simply from all of the spending from all of the campaigns.
All right. But then again, you still expect election spending to remain in the same level that it was in back during pre-pandemic years?
Oh, it's a good question. In a sense, part of it depends on whether there are still any restrictions in terms of social distancing and movement around the country. There could be some constraints on spending if indeed there are some of these social distancing measures still in place. So that could put a little bit of downward pressure on what the normal spending might be.
All right. Again, thank you very much for your time this afternoon. Moodys Analytics Chief Economist for Asia Pacific, Stephen Cochrane. Thank you, Steve. And those are the biggest stories this trade day, October 6, 2021. Catch Businessworld live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos and we are One News. Mask on, wash hands, and stay safe, Philippines.